Hey everybody, it's Uzi from the Option Selling Institute. And in this week's video, I'd like to go over two trades with you. One trade that is open that we put on, which is about 23 days till expiration. And the other trade is an earnings trade that we closed this week for profits. Before I do that though, I'd like to go over last week's action. Um, it was a troubling week in one aspect because it was the first week that we had where we closed a trade for a loser. We haven't had a losing trade that was booked for a loser since we started the Discord. And so it was a sad day, but we knew the day was coming sooner or later. So looking over to the right, you can see the summary that we had. We had 9 closing trades for the week. 8 of them were winners. Let me just enlarge this a little bit. Yeah, 8 of them were winners. We had a roll two. We rolled 2 trades. Let me just erase this. We had our first loser, like I said. We opened 4 new options trades, and we opened that 1 new futures options position. We had some new members join the team, and we had some excellent results from 2 trades where we gained additional profits by selling portions of the trades that we had put on that were able to be sold for additional profits once the trade was actually in progress. Though that's for another time to discuss those type of trades, but they're pretty sophisticated type of options trades with the added benefit of being able to pack on more profits if you get the move that you're expecting. All right, so just taking a glance, you can see we have the new positions that we put on were in Tractor Supply. We put on a put spread. We put on a Caesars put. We have an AMD naked put, and again, that's the copper strangle that we have on. That's new. We are still carrying a few trades here. We have an ALB 80 put. We have the 6E and 6A, which are due to expire in about, I think, 6 or 7 days, and those are in profit. We have a Honeywell put spread working, a NEM put working, and an IBM put spread working. Some of these were from overreactions on earnings sell-offs, so we put on some positions to take advantage of that inflated premium on those sell-offs. If we take a glance over here, you can see some of the profits from the percentages that we of these positions we closed. So we closed an IWM put spread, and we took 55% on that one. We closed an AVGO call credit spread for 58% profits. We closed these are the earnings trades that we closed or let expire. Meta we closed because it was an expensive strangle. We wanted to take risk off the table and free up some buying power, but we could have let that one expire too. We closed it at 97% profit. We had a Caterpillar Iron Condor, Long Island Condor, and Amazon Condor, and we had the trade I'm going to go over, which is the AMD put 111. The CVNA Broken Wing Butterfly I mentioned over here for the added profits, and we rolled a Crocs put, which was part of a strangle. We let the call expire for 100% profit on that side. We rolled the put because the put was challenged, and we rolled a put from the AMD position I mentioned. The Google trade is the one that we had lost on. All right, so let's get into the first setup, and let me pull up that chart for you. So it was on AMD. It was an earnings trade, and the setup was basically like this. So earnings were coming out Tuesday afternoon, and so the stock was going to react right after that, and we were going to get access to trade it on Wednesday morning with new options if we chose to. But we already had our position on because we sold what's called put 111. Now, what that is, it's not too complicated, but for newer traders, it's a little tough to grasp at first. We're basically buying a put debit spread. Then we're going to sell a cash secured put, or if you have a margin account, you can just sell a naked put, which uses less buying power. And for that, because we are selling this put at the bottom of this trade, so meaning you have the put debit spread long, you buy that, and then you're selling this cash secured put or naked put at the end, it creates a credit, whereas a normal put debit spread is a debit. So this creates a credit, and per contract, we receive 30 cents or $30. Okay, the next morning we have the large gap down, like I'm going to show you in a moment, and it actually continued drifting lower, trending lower for 2 more days, which for AMD it was kind of unique because Been a lot of support in that stock anytime it gets sold off, but in this case, it didn't, and it trended lower. But I'm going to show you where it did land on a key level that I think it's due for a bounce coming up in the next week or two max. So here's what the chart looked like. Pardon all the lines, but I did do some technical analysis, and I'm looking at some key levels. And so what we had here was, I'm going to highlight now. This is the day that we put the trade on. This was the day before. This was the day of earnings, actually. And then you have the gap down Wednesday morning, and here are the two follow-through days, which had it drifting lower. And what you see here is it lands at two levels. So it lands at this diagonal support line, trend line, which at one point was resistance here. It was resistance here. It was resistance all along these touches here. But now it's becoming support. So this is what I expect to hold going into next week. And we should be able to get a tradable balance to exit our rolled puts. What you'll notice, though, is it's also lining up with the 61.8 Fibonacci retracement level from this swing low to this swing high. So when you have 2 points like this, I'm feeling pretty confident we're going to get a tradable bounce out of this next week and be able to close our naked put that we had rolled, like I said, for profits. We've already taken in 2 premiums, so the initial premium on the initial position, and then we took in additional premium by rolling because we took in a credit. I usually only roll for a credit, and in this case, it was a nice size credit, as I'll show you. All right, so this is what happened on Friday morning. Like I said, it was drifting lower, and it came out of the gates on Friday morning, with a nice hefty sell-off. This is the 5-minute candles, by the way. So it sold off for the first 5 minutes. It caught a little bit of support here, as you can see on this bottoming wick. It spent a lot of the day just chopping around. As you can see, it did flush, like I said. Continues its lower downtrend. And right around this area here, we decided to exit the long put debit spread. And the reason is because, as you can see, it drifted into our what's called trap zone or tent zone. So we bought the 142, 141 put, and then we sold the 140 put. So being that the stock was drifting lower and it had, the implied volatility was rising, the value of that put debit spread that we owned was going up. So instead of it expiring worthless, and that would have been fine too, because we still had that 30-cent credit from bringing in this, from putting on this position, but we were able to bring in additional premium by selling that long put debit spread, and I'm basically doubling the premium on this trade, as I'll show you the math in a moment. Here's the math on the trade, and I'm going to show you how this works out. It's pretty cool. So, pardon me. So what we did here was, the math is like this. So the initial position we sold for 30 cents. Then we sell the long put debit spread for 40 cents. That equals 70 cents. Now, 70 cents is 233 times the original premium that we took in. So per contract, if you did one contract, so instead of just keeping 30 cents or $30 per contract, it actually went up to 70. That was my cats playing around in the background. Pardon that. So that's how this type of trade works. When it works out for you, it works great. And if the stock were to just meander and not go anywhere near the 142, 141 puts debit spread, we still would have been fine by keeping the 30-cent profit premium. And also, if the stock had rocketed up, this is a position where you have no upside risk. So it's great if the stock falls, and it's great if the stock goes up. The fact that it fell into our trap area was the benefit of adding on to that initial premium. Now, put 1-1s are usually used in the futures world, in futures trading, but I like to use them in certain instances on stocks as well, with like a binary event coming up, or if I'm just thinking that, hey, a stock might drift lower and I want to take part in that down move, but I also want to take in some premium by selling puts. All right, the next trade I want to go over is the one that is open. We put this trade on in the copper's futures with an options position. We did a strangle on it. And let me show you the chart here. Now, copper is in a nice position. As you can see, it's basically right in the middle of this swing high here, this swing low here, and it's in a great area for a strangle, in my opinion. So we sold this upper level call, at 520, and we sold this lower level put at 380. So this is the profit zone, as you can see right here, and the price action is just drifting within this triangle. As you can see, this triangle here. Now you can see it's been bouncing amongst these two trend lines, and it's probably going to break out as it gets to this apex. But we only have 7 days to go in this trade before it expires for 100% profit. So even if it does break out of this trend line here and breaks to the downside, it would have to make a dramatic move in 7 days to basically challenge our position. All right. Let me just erase this. Now, here's the math behind the soybeans trade. Soybeans are a little unique in that we put the position on for 0.008, and copper futures have a 25,000 multiplier. So you take 0.008, you multiply it by 25,000, and you wind up getting $200 per contract. As you can see here, we sold the 380 put, and we sold the 520 call. And this is going to expire, like I said, in 7 days. And I like to let these type of trades expire, save on the commissions, futures options commissions. They're a little bit more elevated than equity option trades. And I always like to let them expire if we can, to let them just go out in that way. All right, let me go over just a couple of reviews that we got on our WAP website. Thank you for these reviews. We've got all 5-star reviews. If you stop by our WAP website, we've got a number of them, and we get a few every couple of days. This first one is from a trader who's been with me since the beginning, and he says that there are tons of great options trades of all varieties. He says the trades are not spammed for no reason, meaning I don't just send out trade signals to give you trades and hope they work out. Every trade is researched extensively before we put it out there for taking, and that's why we have this very high win rate. And as he said, it's nearly 100%. And as he will attest, we were at 100% until this past week, and he highly recommends joining. So if that helps you with any type of decision making you might be on the fence about, this particular person feels very confident that you would do well. The other trade that the other review, my cat's is driving me nuts here. The other review is from a gentleman who has been with me for a couple of months, and he's been around with has had other programs. He probably means other discords. He happens to say that our room here is different, that if you follow the ideas that I put out, that you will make money. And he mentions that I'm available anytime, which is true. That's why I'm looking so tired. I'm always available 24/7 unless I am asleep. And, thankfully, we don't have too many issues that we have to go over post hours, but I'm always available if our members have any questions or any concerns about what type of trades they have in their accounts that we put on. So if these are the type of trades that you'd like to see in your own account, if this is the type of trading room you might want to be part of, it's real simple. Just stop by WAP. This is my link to join up. I have a few different options for you there, depending on what type of entry level you'd like to get in at. No pun intended when I said I have options for you there. And this is me on Twitter. If you want to reach out to me on Twitter, give me a follow or give me a hey, how you doing? Give me a DM if you have any questions. And with that, let's leave it at that. And I'll see you guys on the next one. This is Uzi signing out, and we'll see you guys this coming week. We have a big week. We have the Fed meeting this week. We have the U.S. election this week. So by all means, trade light until you see some of the fog lifting, if you want to call it that, from this week's events, and just try to stay in control and don't get too crazy. So we'll catch you on the next one. This is Uzi signing out. Thanks for watching. If you got anything out of this video, please give me a like and a follow, and leave some comments. Let me know how I can make these videos better for you guys. All right. See you guys.